If your business just filed taxes and you showed a net profit, you might be sitting on an absolute funding gold mine without even knowing it. See, today, lenders care about more than just your score. They care about if your business is actually profitable as well. This is how you're able to access business lines of credit, term loans, and other types of business funding. In this video, I'm going to show you everything that you need to do to leverage a tax return to be able to get 100K, 200K, or even more in business funding by the end of this video. I myself have gotten over 500K in business funding, and I've helped over 200 businesses get over $10 million in funding, leveraging everything I'm going to talk about in this video. So sit back, we're going to head over to my computer and break everything down. All right, so we are at my computer, and I want to go ahead and start with the obvious question. Why do tax returns even matter? Okay, I hear that a lot, and we're going to be breaking that down in this video. The number of reasons is because banks want proof your business is profitable. Banks are tired of dealing with all these businesses that are kind of just faking, right? They're just, maybe they went through credit repair, got a whole bunch of authorized users on their credit report. They got an inflated 750 credit score, and they're trying to go get some business funding. Okay, that's who banks are getting tired of dealing with, and you might be noticing that in your own funding journey if you are that type of person. Okay, secondly, not just that it makes money, but that it keeps money. That's why knowing how to properly file a tax return for a business is very important, because you need to know exactly what they're looking for to be able to get access to what your business ultimately needs, right? So what lenders look for in tax return, we're going to go over this right now. Number one, gross revenue. That is very important. Okay, so what I tell people all the time, you don't need to be making $500,000 or $1.2 million in gross revenue. A lot of times people think they got to have a tax return that shows they're making that type of money, and you actually don't. We've had people, businesses we work with that are making 100,000, 150,000. 200,000, like those are reasonable numbers, and they're able to use that and leverage that return to be able to get the funding that they need. So that's the first misconception. Don't think you got to be having a multi-million-dollar business for this to work for you. You don't. All right. Secondly, net profit, positive, not negative. That's what you need to know. You can't, in return, have a gross revenue of 200,000 and then try to deduct down to zero or show that you took a loss on the business. Okay. One, again, I'm not a CPA. All right. So let's get that out the way right now. Consult with your CPA or tax professional, for more information on this. Okay. But going in that negative, I believe it's 5 years. You can only do it 3 times. Okay. So you don't want to be doing that too much anyway. But again, to be able to get the business funding that you need to look like your business is actually profitable and making money. So that means you got to show a net profit. Stay tuned towards the end of the video. We're going to be going over exactly what those numbers need to look like. But again, net profit, positive, not negative. Thirdly, filing type. Okay. C Corp, S Corp, LLC, sole proprietor, etc. It could be any one of these things, depending on which one of these entity types works best for your business, but any one of these can work. Next, matching info to what's on your LLC, bank account, and EIN. Everything needs to match and make sense. You can't have a tax return from a older business or business you have, but then you're trying to get business funding on a new LLC that you got. Like, it doesn't work like that. It has to be the same business, the same EIN number. All of that has to be aligned correctly. And then whether you're operating like a legit business, okay, or a side hustle, that's what banks want to see when they're looking at tax returns. That separates the real actual businesses that are really doing business and really are profitable and making money versus the ones which they call a startup. Because to be honest with you, most banks, if you don't have tax returns, they consider you a startup. Doesn't matter how many years in business that you are, for the most part. If your tax return shows you made 200K but wrote off 210K in expenses, guess what? You're not fundable because the bank sees a loss. That's just how it goes. Now, is every bank like this? No, not necessarily. But for most banks, again, if you have a net negative, they kind of don't have anything to work with, even if your gross revenue was 600,000. Okay, it doesn't matter at that point if you took a net negative. Inside my mentorship program, we pair clients with vetted lenders who actually make this process easy. So if you are tired of guessing, click the link in the pinned comment. We'll be able to hop on a call with you, kind of sit down, analyze your business, see if it makes sense for us to work together to kind of help you do all of this stuff and get this aligned if you don't have tax returns already and you want to get our help. But let's get to the next part. So how do you structure your tax return to actually help you get approved? And before I get into this, if you're enjoying this video so far, go ahead and smash that like button for me, subscribe to the channel, hit that bell for notifications so you will be notified every time I drop a new video. So the first thing, you want to work with a CPA that understands business funding. Okay, if you're doing this on your own, or however you're trying to get funding, you want to make sure that your tax professional actually understands the agenda, because you can have different seasons in your business from year to year where you're trying to go get different things and you need to adjust your tax game plan accordingly. Okay, most CPAs focus on minimizing taxes. That's their job, right? To minimize your tax bill, and there's nothing wrong with that. But when you're seeking capital, you need to strategically show profit, because that's what you're trying to do. You're trying to get business funding. You got to let these banks see that your business is actually making money. Okay, that's the key. Secondly, avoid over deducting. This is probably the number one thing I see with businesses that take them out of being able to leverage their tax returns, right? Writing off everything may save you in taxes, but it can cost you tens of thousands of dollars in business funding. You have to know that. Don't get me wrong. We all love to deduct down to as low as possible to bring our tax bill down. But again, you got different seasons in your business. And if you're in a season where you're trying to get funding, you got to show that net profit. Okay, guys. Also, file as early as possible. Banks often ask for your most recent tax return, so don't wait until the last minute. Okay, so if you have a business and you've been in business the last 3 years, typically, let's just say we're in 2025, you want to show 2024. That's what they're going to ask for. Now, if you maybe haven't filed 2024, maybe you got an extension, whatever the situation, they'll go to the year prior. So if it's 2024 they're asking for, you filed an extension, then they're going to want 2023. That's just how it works. Okay. Next, keep documents organized. Make sure your Schedule C, your K1s, all that stuff matches your business name and EIN. Keep full copies, including all statements, because banks will ask. Also, they will just have you sign documents where they can just go directly to the IRS and get the information directly from them. So for the people that think, oh, well, let me just go make some fake tax returns, it's not probably going to work, because most of the times they're just going to go directly to the IRS to get this information. So you can't really fake it. All right. Consistency is key. Your business name, address, revenue should match your business bank statements. Clean books and a solid net income number open the door to real funding options, not just cards, which again, everybody wants business credit cards. I think that's all that business funding is. There's more to it, guys. Trust me. Actual capital to scale, lines of credit, term loans, equipment financing, SBA. There's so many different types of business funding that people miss out on or just don't even realize, because they're just so stuck on 0% interest business credit cards. All right. So let me show you how this works in the real world, because you might be thinking, oh, well, maybe you did this, LaJuan, but it's not going to work for me. No, this has worked for multiple people that we've worked with. So this is one of our clients, Robin. She was able to file taxes showing $200K in revenue, $110K in net profit. She had 2 years of tax returns with consistent business deposits. She was able to get approved for a $75K term loan and a $30K business line of credit. Okay, I'm gonna read that again. $75K term loan and a $30K business line of credit. A lot of y'all out here that are, credit stacking, I say that in quotations, y'all just getting all these business credit cards. You might find it hard to try to find 4, 5, 6, 7 banks to try to stack your way to 100,000, when if you have tax returns, you can get 100,000 or over that from just one bank. Okay, I'm trying to make this easier for you guys. I'm giving y'all the blueprint to the game if y'all want to listen. Okay, when you actually conduct yourself like a real business, this funding stuff gets real easy. Okay, you can be able to get 100,000 from one bank and not have to go to multiple banks to try to get it. All right. And this is a message from Robin. She's one of our mentorship clients. She said, I can't believe getting these taxes done was the key. I got approved today from the first bank in the game plan. So this was only one bank, guys. One bank. Uh, I got approved for the first bank in the game plan for 75K, and they also gave me a 30K line of credit, again from one bank. So our second client, her name is Lisa. She had a 450K in gross revenue. She was able to show 200K in net profit after trimming some expenses smartly. All right, she secured 200K from an SBA backed loan to expand her product business. Okay. She said, LaJuan, seriously, I did not think this was going to work this smooth and this fast. Clarissa, which is, one of the underwriters, she got back with me and said I was approved for a 200,000 SBA loan. Okay, it's 200,000. I can't believe this. We finally can get that second building that we need. All right. This is what it's all about, guys. Getting the funding that you need to scale your business and keep it going, right? This is what this all is for. Our third client, Tony, he made 140K in gross revenue. I wanted to show this one because his business, a lot of people are doing these numbers, what he's doing. Okay. So I want to show you guys, this is easily doable, just with a simple tax return. He had 140K gross revenue with a 90K net profit. He was able to secure 250,000 with a mix of term loans, credit cards, and lines of credit. This is real credit stacking, not just getting credit cards. Okay, this is real credit stacking, in my opinion. Is getting a whole bunch of different types of business funding that's going to accommodate your business and what you're actually trying to do. All right. So your numbers tell a story. The better the story reads, the more banks are willing to bet on you. Okay. All this stuff that we talk about on this channel, you're optimizing your credit profile and business structure correctly. Like my 3-step omni growth strategy that I talk about. And then with these tax returns, all this stuff tells a story to the bank and to an underwriter. You want your story to read well in it to make sense for you to get the funding that you're looking for. All right. So now here's the advanced play. All right. It's not just about having a good tax return. It's about matching that return to the right kind of lender. All right. So here's the types of funding a tax return can unlock for you. Number one, term loans, which is based on 1-2 years profitability. Okay, we just showed you guys somebody being able to get over 100,000 in business funding from one bank. We've done that multiple times with multiple different people that we've worked with. Just having one simple tax return, guys. I'm not talking about having 3, 4, 5 years. No, just they asked for one previous year of tax returns and they were able to unlock this type of funding. Okay. Business lines of credit. Usually, you need 100K plus gross revenue and positive a net profit. Okay, which we just went over. SBA loans, which is very tax return focused. Very, they're gonna look at your P&L, which is a profit and loss. SBA is really detailed on their process, but it can be a good option for a lot of business depending on what you're trying to do. Also, high limit business credit cards. This is paired with strong revenue, personal credit, business comparable credit as well. We talk about that in some previous videos. So all these different types of business funding, it gets better, right? A lot of times people talk about business credit cards. Well, guess what? If you got a tax return and you got business comparable credit cards, that's how you can get these 40K, 50K, 75K credit cards that everybody wants. This is how you do it. Okay. If your return says you're profitable and you can back it up with business bank statements, you're golden. Okay. And a lot of times you won't even need business bank statements, to be honest with you guys, because they're just going to look at your credit profile on the business and the personal side. Look at your tax returns. They're going to be good to go 9 times out of 10. So let me give you some quick red flags that will kill your chances even with good revenue. All right. Mixing personal and business income. This is a thing that a lot of people do. You definitely don't want to do this. Have a separate personal account, a separate business account. You pay whatever your personal expenses are as the business owner. Whatever you're paying yourself, you send that to your personal accounts. OK, you don't mix personal with the business. Secondly, writing off 90% of your income to look broke and avoid paying taxes. A lot of people do this and it's not going to help you. Okay. Get to the goal that you're trying to get to. Thirdly, not matching EIN or business names across docs. I keep saying that one because it's so common. I see it very often. skipping taxes altogether and relying on merchant processors or Stripe screenshots. All right, a lot of people will just go to bank statement route and try to get what's called revenue-based funding. All right, and there's nothing wrong with that. That they have their place. That's typically fintech companies that do the revenue-based funding. It's totally fine, but a lot of times they can get into that MCA style of lending, right? Which you definitely don't want to be in, where you got these weekly repayments or sometimes even daily repayments. Sometimes those revenue-based funding options can be like that, right? And that would just kill your cash flow. So you don't want to do that, right? So you want to, again, try to have tax returns to match with merchant processing statements and all that other stuff to go along with it. You're not just running a hustle, ladies and gentlemen. You're running and building a real business. At least I hope you are. Okay, so treat it like one, and funding gets 10 times easier. So if your business has filed taxes and shown a profit, you already have what most people are missing in their funding game plan. All right, solid tax returns, bank statements to match, and structure to leverage. You're one funding play away from growing your business, and your tax return might be the key. Okay, so if you want to know which banks and lenders will say yes based on your numbers, what you can do, if you want our help, you can click the link in the pinned comment. What that's going to do is take you to our calendar page. You'll be able to fill out some quick details first, and then we'll be able to hop on a call, see if it makes sense for us to work with you to help you get your business funding and leverage this type of stuff to get your business funded. If you got tax returns, it makes it a lot easier. If you don't, and maybe your business is making money, hey, we can help you get to that point and show you exactly what you need to do to be able to unlock all these different types of business funding. And if you're even a startup, okay, that doesn't mean you can't get business funding. It's just you got to know which banks and what you have on the table for you guys. So I think that's the biggest problem with people trying to get business funding in today's time in 2025 as we speak, is people not knowing what they really have access to based on where their business is at currently. So you have to know that stuff so you're not wasting time. The number one thing that nobody can give back is time. So you don't want to waste it, and you want to have a game plan for that. All right. But I hope you guys enjoyed this video today. Go ahead and smash that like button if you enjoyed the content. Subscribe to the channel. Hit that bell for notifications so you will be notified every time I drop a new video. Now, if you want to learn the new way to access 100K plus in business funding as quick as you possibly can, go ahead and click the video on the screen right now. It's going to take you to a recent video I just did where I break down step by step exactly what you need to do, even if you're a startup, to get access to 100K plus in business funding, leveraging the new and unique ways banks are trying to underwrite right now. You definitely want to watch that video if you're trying to understand this stuff better. So go ahead and click the video on the screen right now, and I'll see you in that one.